For the first time in history, the FDA has approved the first ever engineered T-cell therapy, Tecelra, specifically designed to treat a solid tumor cancer. This is a significant milestone in cancer treatment. You'd assume that the company behind the therapy would see its stock price skyrocket after this news, but you would be wrong. Adaptimmune's stock price actually collapsed more than 55% since the approval was announced last August. Something isn't adding up. In today's video, we'll cover Adaptimmune's recent developments, including the launch of Tecelra and the promising results from their pivotal trial with Lete-cel. We will also delve into potential market growth, speculate on a fair share value, and consider what this could mean for investors. Plus, we have some important breaking news to discuss: executive resignations, a notice of non-compliance from Nasdaq, and the very first patients infused with Tecelra at a leading cancer center. Is the drama over for Adaptimmune? Let's find out. Why did the stock price drop more than 55% since the FDA approval if things look so promising? The simple answer is that investors want revenue and profitability, and that hasn't materialized yet. Regarding revenue, no commercial revenue was reported for Q3 2024 from Tecelra because no patients had been infused at that time. The company expects to recognize its first commercial revenues in Q4 2024, once patients begin receiving Tecelra. However, they do not expect meaningful revenue until 2025, as the treatment process from patient identification to infusion takes about 3 to 4 months. Looking at cash and cash on hand and expenses, Adaptimmune ended Q3 with about $186 million in total liquidity after drawing down $25 million from their debt facility. Their total operating expenditure for the quarter was $55.6 million. Their short-term strategic business plan involves streamlining operations by reducing the headcount by about 33% and focusing on commercial products, aiming to cut total operating expenses by around 25% in 2025 and over 30% in subsequent years. The ultimate goal is to achieve operating cash flow break-even during 2027. While cost-cutting can sometimes signal trouble, Adaptimmune believes these changes will help them prioritize programs with the best return on capital. Launching a new therapy is always challenging, but Adaptimmune's initial stages of the Tecelra launch are progressing well. In August, Tecelra became the first FDA-approved engineered cell therapy for a solid tumor, specifically synovial sarcoma. 9 authorized treatment centers, or ATCs, are currently accepting patients and referrals, which is at the upper end of the company's initial guidance. 4 more sites have signed contracts and 15 additional sites are in active contract negotiations. Their original goal was to establish around 30 centers within 2 years, but they now believe they can achieve this by the end of 2025, 2 or 3 quarters ahead of schedule. In terms of patient uptake, approximately 15 patients have been confirmed as double positive for the necessary biomarkers, and at least 25 more are in various stages of biomarker testing. These numbers suggest a robust flow of patients and a strong market potential for Tecelra. Adaptimmune isn't stopping with one product. The IGNITE-ESO pivotal trial for Lete-cel met its primary endpoint, showing even better outcomes than the interim results announced back in June. The overall response rate is 42% across the full dataset of 64 patients, including 6 complete responses. The median duration of response is just over 1 year for myxoid round cell liposarcoma patients and just over 18 months for synovial sarcoma patients. MRCLS is one of several types of liposarcoma. Liposarcoma is a rare cancer that grows in the cells that store fat in the body, usually in arms and legs. Lete-cel is expected to expand their reach beyond Tecelra, covering NY-ESO expressing synovial sarcoma and MRCLS patients, potentially doubling the number of treatable patients. Since the commercial footprint and approved centers for lete-cel are nearly identical to those for Tecelra, Adaptimmune expects significant operational and cost synergies, which is a good sign for future growth. Understanding the market potential is crucial for investors. Adaptimmune projects $400 million in combined US peak revenue for Tecelra and lete-cel, if approved. Synovial sarcoma is a rare cancer affecting about 800 to 1,000 patients annually in the United States, with limited treatment options and a 5-year survival rate of only 20%. Tecelra and lete-cel could become the standard of care in synovial sarcoma, given their superior efficacy compared to existing treatments. Lete-cel is expected to make up over 60% of the combined sarcoma franchise revenue. Although synovial sarcoma is rare, the high value of cell therapies and the considerable unmet medical need point to significant growth opportunities. What does all this mean for investors in terms of Adaptimmune's fair share value? Let's say the stock is trading at around 60 cents per share currently. With roughly 255.6 million shares outstanding, the market cap is about $155.4 million. Adaptimmune projects that peak revenue for the sarcoma franchise could reach $400 million annually. Biotech companies often trade at a price-to-sales ratio of 5 to 10, depending on growth prospects. Applying a 5 price-to-sales ratio to $400 million in peak sales yields a $2 billion market cap. Divided by 255.6 million shares, that's about $8 per share. We must consider potential execution challenges, competition, and regulatory hurdles. A more conservative price-to-sales ratio of 3 yields a $1.2 billion market cap, or about $4.70 per share. Even at this lower valuation, the potential upside compared to the current share price is substantial for investors. While the outlook appears promising, key risks need to be considered. Manufacturing and supply chain issues could arise when scaling up cell therapy production. Lete-cel still requires FDA approval, so any delays on that could impact timelines. Competitions from other companies developing sarcoma treatments could also affect some market share. Financially, despite cost reductions, Adaptimmune must carefully manage its cash to reach operating break-even by 2027. Clinically, long-term safety and efficacy data are still evolving, which could influence physician adoption and patient outcomes. Investors need to weigh these risks against the potential rewards. Several factors could impact Adaptimmune going forward. The company is continuing to develop its lead preclinical assets, PRAME and CD70, which could open doors to treating other cancers. They're also seeking strategic partners for these assets and for their iPSC allogeneic platform. If executed effectively, these developments could significantly enhance Adaptimmune's market position. In addition to everything we've covered, there have been important updates that could influence Adaptimmune's market positioning and stakeholders' relationships. First, the company announced structural changes, including the resignation of 2 UK-based executives as part of its ongoing restructuring. They plan to focus more of their operations in the United States, aiming for significant cost savings. This shift could affect internal morale, investor sentiment, and overall market perception. Next, on November 1st, 2024, Adaptimmune received a notice indicating it is not in compliance with NASDAQ listing rule 5450, which requires a minimum bid price of $1 per share. Adaptimmune has until April 30th of 2025 to regain compliance by maintaining a closing bid of at least $1 for 10 consecutive business days. If they fail, they may apply for an extension or face potential delisting. Another key development is that the first patient was treated with Tecelra at Moffitt Cancer Center. This is the first commercial infusion of an FDA-approved engineered cell therapy for a solid tumor cancer in the United States. Adaptimmune, with accelerated approval for Tecelra, plans to have around 30 authorized treatment centers by the end of 2025, covering about 80% of patients at sarcoma centers of excellence. Finally, the IGNITE ESO pivotal trial for lete-cel continues to show promise. If it succeeds, it could expand Adaptimmune's commercial reach beyond Tecelra to include MR-CLS, potentially doubling the patient population and significantly boosting revenue prospects. Adaptimmune is making notable progress with Tecelra and lete-cel, potentially transforming treatment options for synovial sarcoma and MR-CLS patients. The company has a strategic plan to focus on its commercial sarcoma franchise and aims to reach operating break-even by 2027. The market potential appears substantial, yet risks such as executive turnover, NASDAQ compliance issues, and the capital required for scaling remain critical areas of concern. Keep an eye on the FDA approval process for lete-cel, the commercial uptake of Tecelra, developments in preclinical programs like PRAME and CD70, and NASDAQ compliance regarding the sub-$1 share price. Do you believe Adaptimmune's focus on its sarcoma franchise will pay off, or do the risks outweigh the potential rewards? Share your thoughts in the comments, and remember, this video is for informational purposes only and does not constitute financial advice. Always do your own research or consult a financial advisor before making investment decisions. If you found this information helpful, please like and subscribe for more biotech investment insights. Until next time, stay informed and invest wisely.